you read the CBO estimates, what they're suggesting is that the US deficit is basically running on at a rate of about 7 to 8% per annum over the next decade. I mean, these are, well, I'm not saying unprecedented numbers, but they're certainly unprecedented from perspective of running for a decade long. And we've seen occasionally deficits blow out to those levels. In fact, the US deficit this year may well be around 8%. But the fact is, we don't see these year after year after year. So what you've got is a situation where fiscal finances are deteriorating significantly on a structural basis. And they're deteriorating basically because of two factors. Number one is that you've got aging demographics and mandatory spending or mandatory outlays in entitlement spending is set to rocket because of aging populations. I mean, think of in America things like Medicare or Social Security. Now, we know that the welfare state system in America is not as generous as Europe, and therefore the European situation has got to be a lot worse. The deterioration in fiscal finances because of welfare is likely to be dramatic in the case of Europe, and the tax base is of a state where it's very difficult for any incoming party to say that they're going to raise taxes or even cut spending. So what you've got is a structural deterioration in government finances, and this is what comes back to the whole question about funding. How are governments going to be funded in the modern world? And I think that COVID was a very good heads up for us, because what governments did in the COVID period was they basically turned to the printing presses. They printed money. They issued government bonds, and the central banks basically took those government bonds up. They monetized. Now, if we look forward, what you've got is a very significant deterioration, as I say, structurally in government finances. You've got geopolitical tensions worldwide, which says that those countries, those rich countries outside of the West, such as the Middle East, maybe Asia, are less likely to accommodate those government debt issues now. They're more likely to want to put money into gold or diversify their assets rather more widely, and not commit themselves to Europe or the US as they once did. That will mean that the challenge of funding then comes back to domestic institutions in some way. Do you want to burden the private sector with this debt load? I mean, that would be, I think, catastrophic for economies and for financial markets. Or do you want to try and find a way out through getting the banking systems or the central banks to actually fund your spending? In other words, monetization. Now, I think that whether we call it kicking the can down the road or whatever, that is the path of least resistance that many politicians will basically face. And I think what they'll turn to for evidence is to look at Japan, because Japan has traveled down this road some years before. It's kicked the can down the road, for several years. And what they've done is to basically monetize their debt, their government debt. The central bank has basically held large amounts of JGBs, Japanese government bonds. It hasn't had a materially bad effect on the Japanese economy. Inflation is still very low, structurally low. They find it difficult to get inflation up. The Japanese economy may be lackluster, but it's not in deep recession. And I think this may be an outcome that policymakers in the West decide is worth trying. So I would suggest that what we're looking at is a world where either the central banks come in and do more QE. Now, whether that's labeled QE or QS, quantitative support, doesn't really matter, but they're going to take more of this debt on their balance sheets. Or they find another way out, which is actually forcing the banking systems, the high street banks, to actually take on more debt. Now, although that may seem a long shot, banks at the moment, and if you take the US as representative, banks hold about 15% of their balance sheets in government securities. Now, if we go back to the 1940s or 1950s, so going back 50, 60, 70 years, it was much more normal for banks to hold 50% of their assets in government securities. Now, albeit we were in a wartime situation then, but isn't this a war now? We've got a Cold War emerging against China, and we've got a war against demographics in our home countries. So it would kind of make sense from a policy perspective to actually allow banks to hold more debt, and that's clear monetization.